All right, we have show and tell, and JMMB Group is back with us to know, discuss how do we implement all of these exciting, informational, transformational gems that we got from Mr. Mahfood. So joining us tonight is Corporate Manager, Group Financial Partnership and Financial Education. Michelle Sinclair-Doyley is back with us. Welcome, welcome to Money Classroom. Michelle, big up yourself. Glad to have you back on.
Thank you so much, Keisha. Big up yourself. Mr. Mahfood, big up yourself. And hi, everybody. Welcome. Welcome,
Yeah,
welcome.
it was a great discussion.
It
He
was, it
shared
was, it
a
was.
lot. I don't know if everybody was writing as much, and I was busy just connecting it up here because to hear from someone who is so successful and for him to be so generous with the information, I mean, you have the blueprint. You have the blueprint. There's
Mhm.
nothing stopping you from achieving that same success. You have to take the knowledge and know how to implement it. So that's what we're going to be focused on. So let's start then. What are some of the things that we can go to JMMB about on this millionaire journey? What are some of the opportunities? Because we're now on the lookout for opportunities. What are some of these
Mhm.
opportunities that we can go tomorrow morning? Not JMMB. I was on Money Classroom, heard all of these different things I need to think about from Mr. Mahfood. What can JMMB help us to do?
All right. So since persons are asking so much about the stock market, then one of the things you can do right now, if you're already a JMB client and you have a MoneyLine account, is that you can go on and you can purchase stocks for yourself. If you know about the stock market and you're able to trade stocks on your own, so you can actually go on right now and look at what you would like to purchase and go ahead and do some transactions. However,
So,
there's some
so
other
question,
places.
Michelle, let's check and make sure. We want everybody to do it. So can we open a money line account online, or I need to go into a branch? What we need to do? Do I go in? Can I just go
My best advice.
jmb.com, click, and the account is open, or do I need to go into a branch?
For the money line, I would advise that you go into the branch because we need to set up your JCSD account also. So you're going to have the JMMB account, but you're also going to need another account that is just going to connect you to the stock market, to the actual Jamaica Stock Exchange. So therefore, I would say it's best to go in office in order to do that. So for persons who already know about stocks, you know about it, you know how to manage the stocks, that's what you want to do. You can track the prices yourself. You can read the information produced by our research team and you can make your decisions. Then it would be ideal for you to go ahead, open that MoneyLine account, and you can then trade your own stocks. But for some people in Keisha, it's either we do not have the time to do that ourselves and we're watching the stocks, or we don't have the expertise. And because of that, JMB has something special just for you. So we have something called the Income and Growth Unit Trust. And
Say
in
it
that,
slow, say it slow, say it slow
it's
so
slow,
everybody
all
gets
right,
it.
Income and Growth Unit Trust. And with that one, we have already prepared a whole portfolio of stocks, and all you have to do is purchase into that portfolio. So now you're not choosing the stocks and buying this one and selling that one and doing all of that kind of activity for yourself. Instead, JMB is doing that for you. And one of the advantages is whenever you're going to purchase stocks, you have to pay a fee when you're purchasing the stock, you pay a fee when you're coming out of the stock, right? Buying or selling. But when you're going into this particular fund, you don't have all of those fees to pay. And one of the things that rich people like to do, right, is to actually save on fees. So therefore, we help you to do that. And with our expert guidance, we are going to be now managing the stocks. So we're trading the stocks from you. So you can focus on earning money and we will focus on churning the money for you.
I like that. So earn the money and said JMMB, churn the money for me. Churn, baby, churn the money. So
Mm-hmm.
the key thing Mr. Mahfood spoke about also was being consistent. He
Mm-hmm.
said, every month be consistent. He may not have always been, he said, but that's something he definitely strived to ensure as much as possible. He was consistent with putting
Mm-hmm.
money each month into different types of investments. Is
Mm-hmm.
there a way that we can do, some automatic way to get the money to JMMB to buy the different investments every month, or do I have to go down there, join a line?
No, sir. No. Who
I
has
want to
time
make
for
it
that, right?
easy.
Who has time for that?
Nobody,
Nobody.
nobody.
So you can easily set up a standing order from whichever account you have. Let us say you have an account at another financial institution and that is the one that you get your pay in. You can easily set up a standing order from that account to your JMMB account. So it comes over automatically every single month and it will be placed in the various investments that you want them placed in. And for some persons, it may be that you need to do a salary deduction in order to place the money in. So whichever way you choose, you can do it automatically. And I find that when we're doing it automatically, then we don't forget time, then something else happen, and all of those things. And so in order to keep consistent, then that would be an ideal thing to do.
So set that up. We have some questions coming in for you. We
Mhm.
have Colette asking, for the unit trust, how much does JMMB charge to manage that? JMMB have the expertise, they're doing the thing, but it's
Mhm.
not free. The expertise is not free. So what's the cost like?
Khaled, I would have to go and check on the price for you to say exactly what the fees are. What I can say, however, is that they are not very expensive. So, a lot of people believe that, oh my goodness, it's going to be a kill dead fee and that kind of thing. It is not like that. As a matter of fact, as I was saying, if you're going to be buying into the stock market, you'd pay between 1 and 4% if you're going to be purchasing into the stock market. Already that fee is removed because the buy price of a stock and the sell price of a stock is also different. If you buy a stock and then you're selling it, then oftentimes you have to wait until there is that price appreciation. With us, the buy price for the units and the sell price for the unit for that particular unit trust that I'm talking about is the same. And so you have a little less risk going in. Not that we don't have price fluctuations, because it is based on the stocks. However, when you look at what you can get over the long term, it tends to be far more attractive. So let me give you an example because I was running some figures earlier and I realized that for investors who were invested in May 2013, so you'd have started the account in May 2013 and now we're in May 2023, those persons would have earned roughly 220% within the 10-year period.
Let me
So,
put that in context because
mhm,
maybe the number, big number. So you're
mhm,
saying 2013, 10 years ago,
10 years ago.
to today,
Mhm,
2023, if I had put $100 on that day,
mhm,
right? I said, boy, I see my 100 here. I'm very serious about starting my journey. $100. That $100 would have grown by 200 and something percent.
mhm,
Right? So let me bring up my little
mhm.
calculator here. Got it? So 100 times, you said 200 and something percent.
Right, 220.
So
Let me give you the
that's
exact
like
quote.
$320 around there.
Mhm,
That's how it's saying,
mhm.
roughly around that. Doing nothing. This is the essence of making your money work for you. A lot of
Exactly.
us, we say, boy, I want to make my money work for me. We don't really understand, but that is it. I put the money, leave it alone, don't do nothing. I don't have to show up. I don't have to talk to no boss. I don't have to do no overtime, weekend work. I don't have to do anything. I put the money, leave it to the experts to manage it for me, and it would have grown.
Mhm.
Now, one of
But
the
you
main
know,
things
but you
when I
know,
look at
Keisha,
the fee,
although we're talking about the fact that persons can just leave the money there, going back to the whole thing about consistency, you also want to
yep,
make sure that you are adding to the money. Because let us break it down like this, right? If you so I'm just using hypothetical figures so it's easy, right? If you have $100,000 and you earn 10% on that money, you'll have $10,000. If you have $1 million and you earn $10,000 and $1 million, that's $100,000. So the person who has more, even if they get the same rate of return, is going to get more money. So
put
if what
more.
you're doing, exactly. So if what you're doing is you're just gonna put down the money and you're just gonna say, all right, financial institution, manage that, you're going to have far less eventually than the client who would have been consistently putting money in.
So the
And then,
key then, it sounds like the
mhm,
secret, we're just putting it out there so everybody know and they can't say it. It is
mhm,
start, but be consistent. And Mr. Mahfood said this as well.
Mm-hmm.
Consistency is what works. How we
Mm-hmm.
make sure we're consistent? Automate your discipline. Don't rely on yourself to get up every month and do the transfer. Set up the standing order. Automate your discipline, right?
Mm-hmm.
Because you want to get those returns. Investing is the only way you can build wealth. And
Mm-hmm.
how I personally look at fees, because some people may run from fees. I see some fees question coming in, how much? What the fees? What the fees? The thing with the fees is that you are paying for what you get. So if I am paying to get a return that I know I can't get on my own, I'm gonna pay it. Because if I go say, I'm gonna do the stocks by myself, I don't really know nothing about stocks, cause just starting out, me some my food call these companies, me never even know say some of them were listed. I don't know, I just learning. You may be better off getting an expert in a unit trust to manage your money for you because they know what they're doing. And I don't have no problem paying anybody to do the work that I can do.
Mm-hmm.
Right? Same like people will say, all right, the more I do me here. I'm not gonna try and do it by myself. And then it turn out, all kind of things. Pay the expert who know what they're doing to do the right job for you rather than you try it for yourself and it don't work out. So that's how I look on fees personally because I pay fees. I have to pay for things. Generally, I have to pay for things. And I have learned, look here, in all these years on this earth, you get where you pay for. If you're paying and you want the cheap route, you get the cheap result. You want proper returns, you have to pay for expert because they don't come cheap because they know they're experts. If you're going to, the creme de la creme of hair salons or spas, you're paying a lot because they know what they're providing and you better pay if you want it. Same thing comes for the fees. So pay the fee, but hold the companies responsible for the returns. Hold them responsible. Ask a question. What kind of return may I get for the fee here? What are you giving me? So can you give us some insights? I see that coming in now, what kind of percentage is being paid on unit trust, right? So Tanisha thinking about it that way. She said, all right, you want to pay the fees? No problem, Michelle, no problem. What are some of the returns I can get?
All right. And I understand the desire to know about returns. And the truth is that we can never tell you what the returns are going to be guaranteed into the future. We can tell you what the historical returns have been. And the historical returns are not a guarantee of what will happen. And it's about why. Because did you know about COVID? Before COVID hit, we could never have predicted COVID. Could you have predicted the whole war in Ukraine? Could never have predicted. And how it would have impacted our financial markets. What you do want to ensure, though, is that when you look at certain indices within the economy, your portfolio manager is able to normally, because it's not all of the time it's going to happen, but normally outperform them. So, for example, if we look at inflation over the same period of time that I was talking about, right, the 10-year period, it would have worked out to be 5.7%. And some person's going to say, only that? Because remember that some years you have more inflation than other years. So when you look at it on average each year, right, it would have been 5.7%. We would have been returning roughly 22% to you
So
when
you beat that.
inflation would have been 5.7%. If you also look at what the combined stock exchange would have been providing, right? If you look at the combined stock exchange index, the average return for the year, because some years it would have been more, some years it would have been less, but when you average it out for the 10 years, it would have been 19%. So what we would have done with our expertise is we'd have helped you to outperform the market. And as I said, there is no financial expert that can tell you that they can do it guaranteed every single time. However, if the financial expert is someone who is able to do it most times and is able to also weather the various hiccups that come in the financial market, then you know that the financial expert is worth their salt. And I also want to let you know that that's not the only type of unit trust. There are unit trusts that are based on the real estate market, and you have some that are based on the bond market and all kinds of things. There are variety. And so what you want to also do is not just have all your money in one type of asset class. And when I say that, an asset class, for example, can be cash, can be bonds, can be real estate, can be stocks, can be business. You don't want to put all your eggs in one asset class. And so you do want to spread them out. And that is one of the reasons why at JMMB we also have a wonderful goal planning session where we can sit down with you, hear what your goal is, because you need to be aiming for something, right? And based on that, we can now design a portfolio that puts your money in the various asset classes so that if the market goes up, the asset classes that operate in a high interest rate environment would be doing well, and the assets that do well in a low interest rate environment will be doing well when the interest rates are low. And what you want to have is a good balance in your portfolio so that no matter which way the pendulum swings, you will still be okay.
All right, so that sounds like we need a goal planning session to happen. That sounds like we need that.
Absolutely.
But so you're saying, the returns, they beat inflation, they're beating stock market indices. So you're paying for good performance then. It's not
Correct. And
so,
and and the thing is that you need to know what indices it ought to be beating. So with the income and growth unit trust, that's the one of the stock market, the aim is to beat the stock market returns. The one that is invested in real estate is designed to beat the inflation rate. And so you need to know what each investment vehicle is really trying to beat. Because you can't compare one with the other and say, boy, for example, income and growth gave more returns than another unit trust and say that one is the best one. No, it also has more risk, right? And risk and return go hand in hand.
yeah. And as you said too, you probably want a little bit of both in there,
Hmm.
have a piece. So we can benefit the two ways because we like to benefit the maximum way so they could get the two of
Exactly.
them. Right? Question for you from Tanisha. She's saying, is the unit trust a compounding investment? Do we have interest on top of interest? Does that work? Brick on brick, interest on interest. Does that work with unit trust? If not, she want to know because she's ready to go buy something.
All right. So what happens is that you will have a price appreciation happens with the unit trust. So rather than all right, when we think about interest and compounding, we're thinking very often of something where we say, all right, you're gonna get 5% on your money. You had $100,000 to start with, and you get 5% on your money, and so now you have 105, and then you get 5% on top of that 105, and it keeps on growing in that kind of way. When it comes down to a unit trust, what you're doing is that you're purchasing a unit of something, and at the time when you purchase it, the price could be, for example, $10 for one unit. What you want to have happen is that there's sufficient time that you be invested in it for, and the particular security. So let us say, for example, the stocks that are in that particular unit trust, or in another unit trust, it could be the real estate that is in that unit trust would have grown in value. They would have appreciated in value. And so you would have purchased a unit trust at $10 on X day, and then a couple years down the line, you look and you say, but wait, but this thing is now valued at $20 per unit. And so you can sell it and you can get a gain. But in the same way, I would be unfair to not to tell you that you can also have times when the price goes down. And you can say, geez and peas, but I started out with X and now is Y. And so that is why it is important to make sure that the unit trust is something that is ideal for how much risk you can manage to take and also the timeline to your goals. So let us
But
say, for
I
example,
want to add something here because
mhm,
Mr.
yes,
would say that when the price low, sometimes it's a buying opportunity. Because that's what he was
hmm
saying. Oh, he was saying now is a great time to be thinking about buying. So
hmm
not the price fall means run for cover, save your mama. It can be that price fall. Maybe I need to go pour some more money into these investments so I can build my wealth faster. Because that's how I'm thinking now. And I talk to me some of food and tell me the things I am going to implement. And that really stuck with me. They buy when the price dip.
hmm hmm absolutely.
But
And
let's bring up our QR code to make sure because person may be listening and they're ready to go open up some accounts. So we want to make sure that's there as well. Click on the QR code. Want to open your accounts, get connected with JMMB because this was really insightful tonight. And I don't know many people really seen it and say, yeah, man, really, I learned a lot because you don't get access to these types of experts all the time. They don't come and share whatever they do. They don't. So he was very generous to come on to say, I want to be in the classroom to teach persons. The next step is after he shared all these gems to go and implement it. So QR code for the serious people, the serious students, the A students, the QR code is there. Go and now implement. So continue, Michelle.
All right. So I would have dealt with unit trusts already. And I would have shared with you that there are unit trusts that you can actually purchase that consist of real estate. So they have real estate as
we have that. We have a question. What is the minimum amount to open it? Because Jody and ready.
With most of our unit trusts, you can start with $10,000, but it really is dependent on the price of each unit on the day when you go. But with most of them, you can start with like $10,000. But I have found, don't think about the minimum. Don't think about minimums. Think about how much is it that you need to be investing in order to get to the particular goal that you have. Because suppose your goal is going to be $2 million and all you're focusing on is the minimum and you're putting $10,000, that's not really going to get you to James's gate. So instead, let us look at what is the amount of money that you're going to need in what particular period of time. And then we can work it back and say to you know what? This is the amount of money you really need to be putting in to start and on a consistent basis. Now, suppose we tell you a figure that you can't manage, then you're going to start where you are. That's the same thing I have to do, Start with what I could afford, knowing in the back of my mind that the amount that I'm going to need is X every single month, and then you work towards that.
All right. So next question for you coming in. The question's coming in fast and furious. Back on unit trust. If I'm not watching it, how will I know when to sell? I'm going to say, Mr. Mafood said to keep the thing for the long term. So we're not more interested in selling immediately, Dashma Rose, unless you need the funds. Maybe the emergency or so, your emergency fund gone, but you really are not looking to sell prematurely. That is one of the biggest mistakes you can make. Sell before the long term. You buy it and you sell it in a month. You don't want to be doing a lot of that. That can be a dangerous thing. But let's talk about how do we know when to sell?
I was telling you know when to sell when you're ready for your next goal. So when you're investing in the unit trust, you're investing towards something. Is a house? Is it retirement? Is it education? What is it that you're investing towards? And so when that time has come, then that is possibly the most opportune time to sell. Now, suppose it is that at the time when you're ready to sell, you say, I can hold on a little bit because XYZ is happening in the market and I see where the price potentially can go up. So I'm talking to my financial advisor and the financial advisor says, can you hang on for a couple more months? Then you can do that. However, the ideal thing is to always think about what is your goal, what is a timeline to your goal, invest with that in mind, and the unit trust that we will be giving to you, or the portfolio, because I prefer the portfolio approach where you can have everything in there, right? Different unit trusts for the different asset classes. I would prefer that approach because it is a safer approach and it gives you an opportunity to see whether you're on track or off track. That is a better approach. But we're going to build that portfolio based on your timeline. And the best time to sell would be when the timeline has come because you're ready for the house, or you're ready for the retirement, or you're ready for whatever it is that you were investing towards.
All right. So I feel we need to do a whole episode around products, different investment products, because Tanisha asking what types of products have compounding interest. We want to go through that in a lot of detail so that she understands and she can know which one meets her needs. So look, we're going to do a full episode on different type of investment products, and pick a choice, whichever one works for you. And then Dasmos is asking about maturity period as well with unit trusts. So we're going to really go. We're going to do a whole episode, Tanisha and Dasmos, around products, because we can't really answer that very quickly without going into other things. It will take us into a lot of different directions. So we're putting that down. May I write it down? Products. We need a products class. Full products class. Everybody come away. We'll go through all the different types there are. Now, Michelle, final question, just cost to open an account. Take it away.
The cost to open an account? Is that the question you said?
Yes. What is the cost to open an account?
There is no cost to open an account.
Free,
right? What you need to be aware of is how much you need to be. What is the opening What's the minimum amount allowed for that particular account? And remember, I said already, don't be focused so much on the minimum, because most times, even if you can't afford a minimum for that particular portfolio, there's always something else that we can start you out on and get you built to that place. What instead is important is to know what your goal is, how much you need for the goal, and then we can calculate how much you need to be saving consistently to get there. And if you're feeling, oh my goodness, I'm overwhelmed, I can't afford it and everything, don't worry about it. We are going to recognize that you have a gap. We're going to sit down, talk to you, look at your budget, talk to you about how can you monetize your talents and what other creative ways you can find to actually start saving the money that you need to be saving towards your dreams, or I said savings, or it may be that you need to be investing towards those dreams, because it's a savings, for example, if you're doing an emergency fund. But if you're going to be going towards something that is more long term, like preparing yourself to get a home in 5 years, then you can go into investments for that.
All right. All right. So we're going to leave it there, Michelle. Thank you so much for being on. We have to go figure out to do our full product episode. So that's probably likely what we will have. Products, just, pick your choice. Pick your color, pick your choice. Which ones? We're going to go through all of them so persons can really fully appreciate and understand what's really available to them. Because them ready. Them just don't know where to buy, where to put the money. So we have to support persons in doing that. So let's set that up. We will talk about that. So thank you so much for being on, though. Thank you so much.
You're welcome.
That's Rose wants a QR code one more time. So if we could just get that up so she can connect and get her team going. We're also gonna have it in the notes, Rose, so you'll have that as well. Thank you, Michelle. Always a pleasure having you.
Always a pleasure being here, Keisha. All right, enjoy your evening, everyone. It was a pleasure being here with you.
All right, so guys, insightful night, lots of gems, Whole heap of things drop, right? I have Kamika summarizing from Mr. Mahfood. Invest in stocks, pension fund, hold for the long run. Don't hold for a day, hold for the long run. That's really the secret, the holding, the patience, whether with your business, your investments, everything, hold on. And Tanisha is saying, really appreciate his input. So this really was, I look here, get a lot of insights too. Believe me, I am gonna go through. So that's our show and tell segment.
This show and tell segment was brought to you by JMMB Group.
Guys, listen, students, as they say, great information shared tonight. I hope you guys were able to get as much insights as possible. I want that. Remember, go back, rewatch the video, take your notes, make sure you caught everything, and make sure you take action. Also, make sure you subscribe to our channel, like up the video, make sure you're following us on Instagram. We have lots of videos there as well with tips that you can be using right now. And we're also have our newsletter, profitjumpstarter.com/newsletter. You can be connected to all of the information. So make sure you know the drill. Knowledge is nothing without implementation. Until our next episode, I'll see you guys again. Bye.